Oh, I know. Weekend always flies right by, doesn't it? It's back to work tonight, though. It's Monday evening. Got some money to make this week. Hope you guys enjoyed the weekend. Only a couple weeks left of the year. Monday evening, though, back to work tonight. Getting ready for Tuesday's trading session. We had some great moves on the charts here today. Got some great setups we're tracking for tomorrow. As always, I'm going to cover all my favorite trades in tonight's video to make sure you get a game plan to make some money tomorrow. Before we jump in and get this party going tonight, got a lot we're going to cover on a very important video this evening. Before we jump in, though, to get started, make sure you subscribe to our channel. That way you don't miss tomorrow night's video upload. And if you enjoyed the video, do me a favor, will you hit that like button for me? I appreciate you guys tuning in and supporting this YouTube channel tonight. But enough for the intro, right? Let's get ready for Tuesday. Tuesday is looking really, really good. I'll tell you, we had some really nice big moves today, right? Everything looking pretty bearish right now. Oil has that big move down. NASDAQ, nice strong move lower. Obviously, S&P and NASDAQ are everything, right? Everything is bearish right now. Now, whenever we see these really big, strong moves like this, we definitely have some pullbacks, right? We're definitely looking for some pullbacks. But I'll tell you right now, a couple of these markets might not be that easy to short these pullbacks. There are definitely going to be some pullbacks on our radar. But I'll tell you, though, when I go over the charts here tonight, you're going to see why there could be some short squeezes. There could be some nice, juicy reversals to get this week really kicked into high gear, give you guys some easy money-making trades, to get some presents going for the kids later on this week here. So a lot of great trades setting up for tomorrow. Definitely tracking some pullbacks on a couple of these, but we'll talk about why. Some of these markets, though, might not be that easy for a pullback and how to trade the reversal, how to do the short squeeze as well here. Now, tomorrow, Tuesday, big day coming tomorrow, and it may not be because of the actual news that's on our schedule here. Looking at the news reports here for tomorrow, make sure we're all on the same page here. There is, as you can see, there's not a lot of news here the entire week this week. We had that big ISM services number today, and we get PPI on Friday. There's a lot of wide open space, though, here. The second week of the month is always kind of an open window. We got CPI next week, got FOMC next week. So trust me, they're going to make up. They're going to make up for the lack of news here next week. But most important thing is there's no major news on the schedule here for tomorrow. However, don't let the lack of news the next couple days fool you. There's a lot of potentially explosive things that are just kind of sitting under the surface right now. You know, for example, one of the big kind of known unknowns this week is everyone is looking for some clue as far as how much they're going to raise rates in next week's FOMC, right? So markets are a little bit on edge right now, right? They're definitely anticipating, for example, we're going to hear from central bankers in Canada on Wednesday. We're going to hear from the ECB tomorrow night. Those are definitely going to be potentially tip-offs, right? Everyone is looking for any excuse right now to say, they're going to hike rates by 0.5% or a 0.75%. That is definitely something we're watching and could lead to some very explosive moves right around the corner here this week. The next one is this $60 price cap on Russian oil. We talked about this last week, and we're going to talk more about this later on in the video, especially on the chart for oil tonight. But you got to think this is a major deal. I've been in the markets almost 15 years now. There's no precedence for this, right? There's no precedence. We haven't, at least I haven't personally seen any price cap, right? Even in some of the thickest things back in the last financial crisis back in 08 and 09. That is a big variable that we're still waiting for. And I've got an opinion on this. We'll talk about this more later on in the video. And what might be the biggest kind of known unknown this week is China changing their kind of rhetoric, if you will, about their zero COVID policy, right? We talked about this last week as well. Even today, big health officials in China saying, don't you worry about these new variants. They're no big deal. It almost feels like China has their feet to the fire right now. We heard from Apple pulling out iPhone City over the weekend. So this might be a big shift in the global economy. And so that is obviously something that is kind of lingering out there right now. So I'll tell you, you put all of these into a shaker and shake them up, and you've got a recipe for quite a spicy cocktail this week. So don't let the lack of major news fool you. There's a lot going on under the surface. And so those are things we're watching for, really not just tomorrow, but the rest of the week here this week. The rate hike, the price cap, and again, the COVID policy in China. So no major news here next couple days, really for the most part, but those are things you really want to be keeping on your radar. And obviously we'll be tracking that stuff very closely throughout the rest of the week of our trade room. Now, let's get back to our charts though, because obviously this is where the money is made, right? The news is catalyst for us. The money is made in the charts, and I'm going to cover all my favorite trades on each of these charts right now. So make sure you watch all the way to the end, because I do try to save the best stuff towards the end of these videos. So grab some notes, drop some questions in the comment section if you got them. Let's go into the S&P first. We'll go S&P, NASDAQ, and we'll wrap things up here on the mighty oil futures here on this video here tonight. A couple things. First of all, don't forget, these are tick charts in the upper left-hand corner. You can always see the time frames in the upper left-hand corner. And be aware, the S&P is very similar to the NASDAQ. So, a lot of this stuff will be very interchangeable back and forth. So just be aware of that. What will work on the S&P will probably work on the NASDAQ, and vice versa. Also, any important links tonight, any more supporting information, you can always find that stuff in the description of the YouTube video. So any important links I talk about, supporting information, check the description in the video below. Now, let's get down to business here right now. There are basically three key insights that are tipping us off to where the best money-making trades are likely going to be for tomorrow. The first one, of course, is this strong move down, right? Anytime we see a strong move down, what do we expect? We expect that, in this case, sellers are going to be looking for overhead resistance. They're going to want to wait for a pullback and sell back down to retest the low. So anytime we see a strong move, we expect a pullback. We expect, in this case, bears to enter, want to retest that low. And then once we get a retest of the low, do we see a double bottom reversal back up, which could be one of the best trades for tomorrow? Or do we see a breakdown through that low, undoubtedly looking for the next big objective for the bears at 39.37.5. So you can see that's a big resource or big clue there for the sellers. Now, you'll also see the second clue here right now is this support trend line. Same thing happening right now on the NASDAQ. So think about it. If we have a strong move down and we're anticipating a move higher, that might be a bit of a challenge, right? That might be one of the big clues for that squeeze I was talking about. Now, I would imagine that sellers would like to be trading around that trend line. So we'll definitely talk about that. Remember, that trend line could be a very, very big part of this reversal tomorrow and the short back down to retest the low. And then speaking of retesting the low, let's not forget where we are right now, boys and girls. We are back at last Friday's low. We just talked about this, right? What do we always say? Anytime we get a strong move, and it's almost laughable how big that candle is, right? Strong move down, what do we expect? We expect to pull back. Incredible how it reversed back up again. But look, was it any surprise? And we talked about this morning in the morning trade room. It should be no surprise that they ran right back down to retest the low, because that strong move is a big magnet, right? It's a big bullseye. So now this is the $1,000 question. This is the $10,000 question. When they pull back right now, does this low hold? And does that produce a bit of a squeeze back up, which could be a very, very good trade for tomorrow? Or can the bears really hold this thing and retest the low? So these are some really, really interesting charts we have here for today. And we'll talk about the game plan here right now. So what you want to think about right now is, if you're a seller right now, you're looking for that pop up and that short back down, right? The bears have a pretty straightforward game plan. As a buyer, though, there's a lot of different ways to make money as a buyer. One of my favorite ways to make money as a buyer with this type of situation is a retest of that low and then get that double bottom off that low. That's definitely a reversal we want to keep on our radar here. The other one would be, again, let's say that trend line holds. holds, you could easily think the bears may find themselves in trouble and we might see some stop runs here, some squeezes and some runs back higher. There's that big juicy range up there, 40-75 area, right? Before the big non-farm payroll crash that we saw last week. So you got to think buyers would love to go back up into that trading range, take out some of those big 4,100 levels up overhead. Okay, so now you kind of know what's going on in my head right now, kind of what's on my radar on this. How do we make some money on this? The biggest hurdle for the sellers is this trend line, right? It is for that trend line. And so what you really want to think about is there's probably four different ways we can both sell this and buy this thing going higher. That trend line is a big problem, right? That trend line is a big problem. What I need to do is I've got to get a deep enough pullback to attract in some of these bears, but then I've got to get underneath this trend line. And usually what you want to do is you want to use a combination of the 2-try rule and a bit of that kind of breakout, kind of up or underneath and back up here. Okay, if you're a student of mine or if you've taken the free trading classes, you know about the 2-try rule, right? So as we go higher, what I'd like to do is get these buyers to come in, see if they can try, right? Try once, try twice, and I want to try to use that trend line as resistance. And again, this is a lot of the same stuff you guys are learning in the free trading course, right? Which most of you guys are taking right now. So get that deep pullback, get up into an area of resistance. But again, I can't just sell that thing because that trend line in my way. Let the buyers try once, let them try twice. And again, because we're sitting right at that big Friday low, hopefully we'll get some real aggressive buyers up here to take the bait, try to be a buyer off that low. Remember, the low of day right there is still the big bullseye. Once those buyers get long, think about where their stops are, and we can literally sell right back down to retest the low. This is ultimately, in a nutshell, kind of the way I'll be looking for that short early in the session tomorrow morning. Get up into resistance, get the buyers trapped in, trying to be a little bit too aggressive, right? Buying, because we're not a bull market yet. See if we can get those stops get hit with what I call a failure pattern. Again, in this one, it's a little bit more of advanced failure setup. It'd be a 2-try with that, either a short off the trend line or selling into those stop losses. This is a 2-try failure pattern. It's a variation of the failure setup you guys are learning in that free trading course. Now, another setup I would definitely keep your eyes on here right now is if we go, for example, let's say the writing's on the wall, let's say something happens overnight, and again, this trend line's a big deal. So what if they popped up here and then began to grind with that short squeeze? Big clue. What I can do now is I can mark a trend line off that high. I can bring it down off that low, right? See how we're doing here? Now, at this point, the gig is up, right? At this point now, the bears have failed, the trend line held, and we get what? A strong pop higher. Anytime we see a strong pop higher, what do we think? Pull back, retest. This is where we can go out. See how I draw that channel backwards, right? Off the highs, off that low. Okay, find the channel, and then go looking for a prior swing. This is, as you guys know, if you've taken the free trading course, this is a great spot. I love to get that first test off the low of that channel. And really what you're trying to do in this situation is you're trying to get underneath the 21 moving average, 21 EMA, right? Because you want to get below a prior swing. That's where traps live. You want to get below the 21 moving average. Hopefully bears will come in, try to sell this thing back down again, right? If they short that off the 21, think about where their stops are, right? Failure pattern, and then potentially a pullback combination, right? Makes sense on that one? So again, it pops up, it grinds higher. We find that hidden channel by drawing it backwards. Bear trap, seller failure, bullish pullback. And again, we know where that big objective is now, right? Going higher here. These are all the same entry patterns, by the way, all the same stuff I teach in that free trading course, which reminds me, I know that most of you guys have taken the free classes. You've learned all the traps, the failures, the pullbacks, the price action cycle I teach as part of our free trading class. But hey, if you're here for the first time, if you haven't taken the free class yet, what are you waiting for? I'll put a little pop up there for you in the upper right hand corner. Grab that link, take the free trading course, because I'll tell you, the strategy I teach in that free class will show you a simple trick to know where the best winning trades will be each day. And I'll teach you 4 different simple entry patterns to get you started making money on your own account. If you're not getting the results you want, if you're missing too many good trades right now, take that free course. It's perfect for someone trying to make the jump into full-time trading. That way, the next time I get, for example, here's one more here, right? So the pop and grind is great. Let's say, for example, right, we pop up, we pull back, and we pull back to that moving average, and we blast off the moving average. What do we call these? We call these 1, 2, 3 reversals. I can then mark off that high. I can mark off that low, right? Drill down, find those prior swings. That's where traps live. Get below the 21 moving average for your failure patterns. And again, I'm obviously keeping this stuff simple right now, right? You'll learn more details of the entry patterns and techniques in that free trading course. Now, keep in mind, on a 1-2 jump as we go higher, the first leg, right? The first leg and the third leg are usually very symmetrical. So kind of think about that first pop up. Okay, that's the first leg. And then, of course, the third leg, that will give you a really easy tool to kind of kind of pinpoint those good exit targets as we go back up into that trading range overhead. There's one more thing, though, that I want to kind of bring to your attention. We talked about this kind of move up, trapping the buyers once, twice, use that trend line, right, back down again. We talked about that. A couple things I want to keep in mind, though. One variation of this, okay, one kind of variation. Let's say we go up, we get 1, and we drop, right, that big drop down. What do we do then? Right? At that point now, that trend line's way, way out of the picture, right? At that point, remember, where do they want to go? They want to go back to that low, find that prior swing, and grab that trap before we get back down into that low here. Okay, does that make sense? Right? It's the same idea. It's 1 try, it's 2 try, but because we're a little bit lower down the line, right? Remember, we don't want to sell low, we want to sell high. And so that's where a trap entry comes in. Again, you'll learn a lot about bull traps, bear traps in that free trading course, right? So keep that in mind for one more kind of variation of that short. And another variation, which is very possible here, is we may see it run up. And you know, the markets have been wild lately. They may not give us that pop and grind. We may not get that 1-2 blast. We may not get that 1-2 back down again. No, it may just simply pop up, slam back down, and begin to grind down from there. What do we do in that situation? We use the same way, but the opposite direction. Mark that low, mark that high, see how I do this, right? And then we go look for that short off that trap. Remember, if we can't sell high, if we can't sell it high like that, with a 2-try failure, right? If it goes lower and kind of slips below without us, then traps are going to be your bread and butter because you want to sell as high as you can on the way back down to retest the low. All right, guys? So again, be aware of those. Again, it could pop up, pull back, and blast. 1, 2, 3 reversal. Buy that low, or pop up and begin to grind as we're going higher, right? And go from there, right? Makes sense? Okay, now we're on a pretty good track here right now, looking for both sides here as it pulls back. Now, the next big question is, what if we do get that move up, that retest of that low? How do we buy it? Right? Can I buy that low? Absolutely we can. Can I sell the breakdown? Oh, and by the way, what if we never pull back? What if it opens up and keeps going lower? Like, what do we do then? You know, remember, I want to make sure that I've got my game plan ready for all of these different situations because, you know, if you make predictions, you only get one way to make money. But if you plan your trades, remember the markets go up, they go down, and they go sideways, right? So you want to make sure you're ready, definitely mentally and technically, for anything the markets throw at you. So let's grab the NASDAQ here next, right? S&P and the NASDAQ are very, very similar. You'll notice we pretty much have 3 of the same, right, big clues right now. First one, strong move down, looking for a pullback and a retest of that low, right? First clue. Second clue is that support trend line. This could be your best friend or your worst enemy tomorrow, right? So obviously keep that on your mind. Same thing we talked about on the S&P. And then last but not least, not yet, right? We didn't quite finish off that non-farm Friday low just yet, but it's right there. It's right there, just taunting these sellers right now, right? If this chart could talk right now, it would be talking trash to the bears. I dare ya. Come on in and short this thing. You can tell right there. All kidding aside, though, that's a big clue. Big strong move down. They're trying to retest that low. And then again, if they can, possibly back up, take out some of these big highs up overhead here. So a lot of the same stuff here on the NASDAQ. I don't want to waste your time too much on this video and repeat myself too much, right, over and over again. The same game plan, right? The same game plan as we had going higher. I would say, though, on the NASDAQ, I would say there's probably one more variation of that long term. The short is the same exact thing, right? The short trade is the same exact thing. The one kind of variation on the NASDAQ, which would also apply to the S&P, would be if this thing really just rips, right? If we see a real strong jump higher, which doesn't seem likely right now, but I don't know what's going to happen tomorrow. Nobody knows what's going to happen tomorrow, right? So be prepared for this one as well. If it really rips and jumps higher, right, watch for that strong move, that shallow pullback, that higher high in price, and that trap entry, right? Traps are great whenever we see a lot of momentum, a little shallow pullback, the higher high in price. Now make sure you pay attention to this thing, how it works, right? Strong move up, shallow pullback, right? Barely kisses the moving average, 21 EMA, higher high in price. Okay, the higher high is critical. Okay, that's going to give us now that trap right as we go. Now, I don't want to get those emails. If it does like this, runs up and then pops back down and grinds down, right? I don't want to get those emails about, well, Joe, I thought I was going to keep going. I'm giving you a warning right now. Remember, it's a very strong bear move down, right? So wait for the signal. Wait for the proper signal. We have to be disciplined to trade what we see, not what we think. Mark off that high, that low, mark off that high, right? And then we look for that short wear back down to retest the low. Okay, so keep an eye, strong pop, right? Shallow pullback. We see these all the time, right? Strong move, shallow pullback, lower low in price. As we always say in my trade room, traps, baby, right? These traps are great setups if you have enough strength. Okay, now that we're done talking about the variations on the pullback here right now, how do we buy it off the low? Can we? Yeah, because we definitely can. We definitely can, right? Now, there's a trend line coming down here on both the NASDAQ and the S&P right now. So ideally, we want to get that retest and work our way around that trend line. But all things equal, though, right? All things equal, what you want to think about is strong move down. We pull back, whatever happens, right? The buyers fail. We end up back down to retest the low. This is a very good trade, one of my favorite reversal trades in our trade room. Once we retest the low, think about this now. The smart money is selling high, right? The smart money is selling off resistance. Who is selling down here? I guess by definition, the opposite would be the dumb money, right? No, the inexperienced traders, right? Smart people that simply haven't been in the game long enough. They haven't paid their tuition yet, like all of us have to the markets, right? So when they get back to these lows here, what I always tell my students is, if you want to try to pick a bottom or get a reversal, you need one, a major turning point. Right? 2, you want signs of exhaustion. And 3, that's not spelled correctly. I apologize, right? I'm not an English teacher by any means or a math teacher. And the third thing is you want to have some sort of catalyst, right? You want to have some sort of catalyst. So if I want to get a reversal going, 1 is a major turning point, like a retest of a major move going lower. Second thing is a sign of exhaustion. Now, what's a sign of exhaustion? This is where that 2-try rule comes in handy again. Like I mentioned before, you guys are taking the free classes, or you're a member of mine, a student of mine, right? We know the 2-try rule is the best way to show signs of exhaustion. No matter what side you're on, no matter what market you trade, traders like to try twice and give up and go in the opposite direction. So signs of exhaustion are going to be 2 tries. Now remember, when you want to look for the 2 try rule, you want to see 1 and 2 at higher prices. Why higher? Because sellers want to sell high. So as the price goes higher, right, they try once. As it goes higher, they try twice. So that's our signs of exhaustion. Now, what's the catalyst? The catalyst is a stop run. So like I mentioned earlier, use stops as fuel, right? The buyers will hopefully buy that pullback, and the sellers can use their stops as fuel. If we can trap in some of the bears down here, and think about what I always tell my students is, kind of think about where, if you were a seller, where would your pain be, right? If you were a seller, where would you be forced out of your short position and what? Buy your way out. So remember, if we can get some stops getting run, we've got buyers buying off the low, but we also now have sellers buying their way out of their position. This is a great potential reversal coming off of that low, right? A 2-try failure as we go. Now, if we're lucky on this, we'll get a crown reversal, which is basically just a little trap entry right below that low, right? Same idea, 1 try, 2 try. Again, if you're taking my free trading class right now, you know this. I love traps. Why? Because traps allow you to buy as low as you can, right? You're buying at a rock bottom price there rather than buying up here. So it's more desirable, right? That trap. And if we really get lucky, we'll get on the way back to that high, right? Because that's where the market now, in this example, of course, and again, same thing on the S&P, if the buyers if we get that reversal, where's the market want to go? It's going to want to take out that high right there. If we're lucky, we'll pop up and we'll get a new channel coming off of this low. One of my favorite kind of combination entries is that failure into, what do we always say in the trade room? First test is the best test, right? So you got that 2-try failure. And then, of course, as we pop up, we find that new channel. Remember, get into this follow-up before we retest the high, because this could be turning into one big trading range, right? We go up, buyers pop it up, buyers try once, buyers try twice, stops get run, and we're back down into that range. Bears once, bears twice, stops get run, back up. You see how this little dance works? Okay, obviously I'm just drawing the screen right now, but you're going to see a lot of this in the trade room. You'll see a lot of this, of course, in any market that you want. So keep an eye on that double bottom reversal. Now, as you can imagine, right, let's say we pop up here. Let's say the buyers get trapped. We retest that low, but no. There's bad news from China. There's stuff going on tomorrow. Who knows, right? And they blast right through it. Okay, remember, we're not going to pick a bottom on this. We wait for signs of exhaustion. We hit the stops, right? So what if it goes up and runs and break lower, right? Well, hold on. Remember that reversal pattern? Remember those 2 reversals? What were they again? It was that pop and grind, right? It was the 1, 2, 3. Okay, those are the same reversals now are really the same types of breakouts, right? Or continuations going lower, right? So we pop up, we trap in those buyers, we run back to retest the low, but no, we're not done yet. The bears come in, they hold that pullback, and what do? They jump, right? They blast. And anytime we see a strong move like that, what do we expect? A pullback and a retest. So now what do? We go out, we find those lows, we mark up around that high, see it? And we go out and find, again, I love traps. What I really love, though, is the first test off the high of that channel, right? It could be a bull trap. It could be a buyer failure, right? It could be any of the entry patterns we talk about in that free trading course, okay? Keep in mind, where do the bears want to go down here? Look at all the open space they have at that 11,465. Let's call it 11,500, right? 11,500. Pretty good objective there. You'll notice right away the Nasdaq has a lot more open space to go, right, than the S&P 500 does, right? So keep it in mind. Or we pop up, we slam back down, and we start to grind down, right? Again, news headlines are coming out. China walks back their zero COVID policy, right? They're back to their restrictive guidance now on COVID, right? We get some tip-off, right? They're going to raise rates by 0.75%, right? There could easily be some news headlines overnight. Things are happening and the market keeps on grinding down. Again, I like the idea of the reversal. I like the idea, but the market could care less about what I like, okay? It doesn't care about me or you or anybody, right? It's going to do what it wants to do. So we look for that buyer failure. They retest a low and they begin to grind down. One of the easiest clues you're going to get, right? Mark off that trend line there, mark off that channel there. Keep in mind, I'm obviously drawing this up right now. It could be even lower than this, right? We'll want to wait for that pop and grind going down, find those prior swings. You got it. And then go out and look for that first test off the high. It could be a bull trap. It could be a buyer failure, right? Buyer failures look like that. Right? So strong move down, we pop up to the buy off the 21 EMA and then sell back down again. We could easily see that pattern right there. All right. And again, we have a pretty good idea of where the market's going here next, that 11,500 area as we go lower. One last thing I want to cover here, and then we'll go grab the oil, because oil is a big one here right now with that Russian price, that price cap. One thing you want to keep in mind here is if for some reason we go into a range here, okay, ranges are pretty straightforward, except one big wrinkle. So, for example, if we do end up going sideways here in a range, this could also be in the S&P as well. Not a lot changes. Okay, the good news is if we do see a trading range here, that trend line is going to be gone, right? But if you have a range here, ranges act like magnets. Okay, this is where things get interesting here. First of all, if we get that pop up, because we're sitting at major lows here right now, I still like the idea of that 1, 2, and then back down we go. I still love the idea, right, of the 1, 2, back up from there, right? So those are unchanged, okay? Those are fine. Those are the same exact game plan with the exception of that trend line, right? Like I said earlier. And again, this will also apply on the S&P as well. What I want you to kind of be careful with when it comes to ranges is that ranges will do this sometimes. If we see a trading range develop here overnight, sometimes what happens is the market will go lower and then come back up. All right. And this is where we get these potential, what I call slingshot reversals. Okay. So do not be surprised if this happens in the S&P or the NASDAQ overnight. We saw a lot of ranges today. So if we go lower here, right, if we go lower, this is exactly where that 1 try, that 2 try, maybe a crown reversal can come in, right, and buy off of that low, right, buying back up. What I want you to keep in mind, though, here is that as it goes higher, this momentum becomes very, very strong, and it will oftentimes go up to the kind of what I call the pendulum swing, a symmetrical move going off of that low. What you really got to be careful here with is trying to sell into that move. Okay, so you really got to be careful. Don't get too aggressive if it starts off below the range and then runs all the way back up, because as it kind of rotates higher, these will oftentimes do something like this where it'll pop up and begin to grind, right? And there's that pop and grind, that channel right there, right? See how that works, right? So mark off that low, get that first test off of that low. I'm obviously keeping it simple right now. We've talked a lot about these patterns already, but be aware if it goes sideways and we jam below it, 2 tries, again, because we're so bearish, I want to trap in those bears, use those bear traps or those stops for fuel, and then look for the target on the side of the range, right? Pendulum swing. Again, same basic idea here on the S&P. But be aware, though, as it makes that run higher, this thing really gets aggressive as we're going higher. Be very careful shorting this thing as it rotates off that low. And as always, if we do get that trading range down here, if we do break out of that range, if the bears can hold that pullback and blast going lower, once again, that's a 1, 2, 3, right? We're not going to sell that first pullback. But again, I'd rather be a buyer on a failure back into that range at that point. But if they can 1, 2, 3 and really jam it going lower, yeah, a lot of momentum for the bears now. We'll mark off that low. We'll mark off these highs, and we'll grab that first test off the high of that channel. All right, guys. So I know this is a little bit more advanced. I don't want to cover too much on these videos because I know it gets overwhelming, but not to worry. Tomorrow, we'll make sure we know this stuff. We'll make sure we have the game plan tomorrow morning in our trade room. You guys can handle it. You guys are smart people, right? I just want to make sure you're kind of aware of that potential sideways movement there and how those slingshots will oftentimes get those reversals. What do you think, by the way? What do you think, by the way? Am I crazy right now to even consider a reversal or a short side? What do you think? I'd love to know your feedback. Drop me some comments in the comments section. Maybe post a chart you're looking at right now. What do you think? Right? Am I going crazy here later on in the video? What do you think? Love to know. Over on the oil, let's wrap things up here on the oil. The oil, in my opinion, right now, we're obviously, look at this move, right? We're obviously very, very bearish right now. There are three clues here. Okay, one, of course, is that strong move down. Now, we know what a strong move down tells us already, right? We know this already. This, though, is a very big move down. Now, what's the difference, Joe? Who cares, right? Strong move, big move, it's all the same, right? Not exactly. Whenever we see a move like this, where look at this. It never pulled back to the darn 21 moving average. So what do you think? There's going to be a lot of bears out there, right? A lot of bears that may look at this and go, I'm not selling way down here, right? I'll gladly sell up here, right? I'll sell what? I'll sell a deeper pullback. So the thing is, when you see a strong move, you want to sell the pullback. When it's a really big move, right, without any decent pullbacks here, you got to be thinking that bears could easily come in here and say, you know what, I like the idea of a short, but this is way too low to sell. I want to see a deep pullback. And that deep pullback oftentimes will really make it feel like a reversal, right? It'll slam higher. You go, oh, shoot, maybe they're reversing this thing. Maybe not, right? Trap the buyers in, back down to retest low. So deeper pullback expected on the oil. Now, the third clue. And I mentioned earlier that some of these markets seem to be ripe for the reversal, some don't. Now, I am no geopolitical expert whatsoever. I'm also not an economist, right? I'm just a lonely old day trader, right? Helping students make money every day in my trade room. What's happening right now doesn't appear to make sense. So kind of follow me on this here for a moment, and I'll try not to waste too much of your time. First of all, the $60 price cap on Russian oil. We talked about this last week. Whenever you put a cap on anything, it creates scarcity. And whenever there's scarcity, the price always goes up, right? This does not fit the narrative for a price cap. Again, I'm not an economist, but the last time I checked, anytime you take stuff away, right, whatever the situation is, anytime you remove stuff, it creates scarcity and usually prices will go higher. The next big thing that makes zero sense whatsoever is over the past 2 or 3 weeks, every time the market said China making changes or easing their COVID policies, what happened? Oil jumped. Does that look like a jump to you? No, it doesn't. So the fundamentals we're seeing right now, right? The price cap on Russian oil. And hey, maybe you guys are more versed on this. What am I missing on this right now? Because this stuff doesn't make any sense. Why would this market be going lower so aggressively, right? Maybe it's a bait, right? Maybe it's a bear trap right now. I don't know, right? But this does not make sense to me, right? Especially that change in COVID policy in China. This is the first time in weeks we've seen this market in particular, sell off when China's saying, don't you worry, we're going to be open, right? Today we heard them say, soon you'll be able to travel across the country without any limitations. I mean, why on earth would that produce a big move down in oil? Again, I'm not an expert, right? Maybe you guys can enlighten me here in the comment section below. I'd love to know what your thought is and why this is happening right now. I really genuinely would like to learn more about this. So knowing this is either a huge bear trap right now, right? We're sitting at some decent support, right? We're not at like some big support level, right? We're not like we're way down here, right? At that 73.60 level, which is where the bears would love to go, right? It's not like we're sitting at some big level. Either this is one big bear trap and we're going to go right back up into that 81 range overhead, right? For whatever reason. Or, right, or we have a very, very big problem with oil, right? Either that or the market saying, you know what, we're buckling in for a recession next year, you know what I mean? Either that or the oil is so bearish right now that they're pumping into every, right, they're literally selling into every what would normally be a bullish news report or a bullish headline on the news feed. So again, this one seems like it's difficult to pick a bottom on. It's very difficult to want to be a buyer in this market until we know more. Okay, so as we go higher, let me try to wrap this all together here for us. I've been rambling a little bit here. I apologize on this. But now, again, want to get that deep pullback. I think what I'd like to do tomorrow is, and again, I know what my favorites are, but we'll see what the market gives us here tomorrow. I'd love to get that nice deep pullback. Again, deeper the better, because that huge move that we saw today. Now, again, hopefully that deep pullback will get some buyers going. Oh, see, I told you, ripping it back higher. And again, they might do that. But right now, we have that strong move down. I can't be a buyer yet. I can't do that just yet in this scenario. Let them try once, let them try twice, and again, hit those stops and sell back down to retest the low. Once I get back down to retest the low, mission accomplished. And again, 1, 2, trapping those bears. Where's the target? Back up to retest the high, right? Or they break, or they hold that pullback, they blast going lower, right, with a 1, 2, 3 breakout or a pop and grind breakout. We just talked about that on the NASDAQ, right? So I'm not going to go over all that stuff again here right now. But again, pop it up, trap the buyers in, then do they fail and off that low, or do we hold and get one of those 1, 2, 3s, right? Or those pop and grinds, same thing we talked about earlier. And again, we know where the bears want to go, right? It's very, very obvious, right? That 73.60 is just staring us in the face here right now. The other scenario would be would be the kind of and this would definitely fit the narrative right now for oil. It's been so back and forth here. It slams up, right? It slams back down and begins to grind down. What do? We mark that low. We mark that high. I know it's difficult because it's very difficult to pick a top, right? In those really deep pullbacks like that. And I'm just not a big fan of picking tops and bottoms, right? I'd rather wait for the market to give me the clue I need, and then I can go in and I can grab that short to retest that low, right? Makes sense, right? So that's the way we want to trade, that V top coming in off of that low. Or we pop up. Yeah, we pull back to that moving average. Buyers come in. They don't fail. No. They jump off that 21 EMA. We mark off the high. We mark off that low. We drill down. Again, this is a much slower time frame we use tomorrow morning trade room. And we load up on a bear trap, on a seller failure. And again, you remember the first leg and the third leg are going to give you a good exit on that one. Or hey, maybe this is just nothing but a bear trap, right? Maybe this thing pops up at the open in Asia, so it's a grind here overnight, and we're sitting here going, all right, give me that pullback I want right now. Get underneath those prior swings, that pop and grind as we go. I would be a little careful on the 2-try trap, right? That's strong. I mean, it would have to be a very strong pop up, strong move, as I said earlier, strong move, shallow pullback, higher high in price. Just make sure that this entry, if you get it, make sure we're good and clear, through that area right there. I wouldn't want to be like, strong move, shallow pull like that, right? That wouldn't quite be there just yet. You know what I mean? Really got to get through these areas of resistance and then get strong move, shallow pullback, that higher high in price, and that trap from there. Buyers would love to go back to 81, really 83 is kind of where they love to get there. So I'll tell you, oil is a very exciting market the rest of the week this week with this, again, with the COVID changes in China, the oil price cap in Russia. Not a lot of it the chart makes sense, but the fundamentals are a bit funny right now, right? So hopefully you guys will clue me in on that, maybe educate me in the comment section. But guys, that's the game plan for tomorrow. And again, same thing, right? If we do end up going sideways here, what do? We go up, we trap in the buyers, we sell back down again, right? Remember, be aware though, be careful. If it goes sideways, goes lower, and then snaps up, be careful. That becomes a very likely squeeze, and we get that rip going back in the opposite direction. All right? All right, I don't want to cover too many more variables because, we want to keep it as simple as we can on this video, but that will definitely get started for tomorrow. And don't forget, we're planning our trades tonight. And tomorrow we'll trade our plan together, 8 o'clock Eastern time. Don't be late tomorrow, right? We definitely have a big week ahead of us. We get the end of the year right around the corner. It is crunch time right now. There definitely will be a sense of scarcity in these markets this week, and I want to make sure we get the best out of the trades tomorrow in the trade room. Tomorrow morning, 8 o'clock Eastern time, we'll get together and we'll trade this stuff together. If you're not getting the results that you want right now, if you're getting inconsistent results right now, come out and trade with me in the morning session, 8 o'clock Eastern time. I'll put all the important membership links, the free class links, the trade room links. I'll put all that stuff in the description of the YouTube video. If you have any questions or if you need help getting into the free trading classes, you can always call the office. You can use that live chat there. I do get to the question in the comment section quite frequently, but the easiest way, if you have questions, if you need help with anything, just simply call the office, shoot me an email, jump on live chat. I pretty much am always available at those channels as well. All right, guys, I'm going to wrap things up here for now. Hope you learned a bunch tonight. Hope you use this new knowledge to make a killing tomorrow. And of course, tomorrow morning, 8 o'clock Eastern time, we'll see you there. If not, we'll come back and we'll do it again tomorrow night and get ready for Wednesday's trading session. As always, guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.